What's going on, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is July 13th, 2021. Please go ahead and click the like button on this video and subscribe to my channel if you enjoyed this content, and I will continue to make it for you. Today we're going to talk about the price action in the indices. We're going to go under the hood and check out our sectors and style factors. We have a lot to discuss today. We will go into some of my trades for the day, and then we'll wrap up with some options order flow. Before we jump into all that, quick first disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters, and last but certainly not least, do not YOLO your entire account into any one of my trades. All right, so let's jump right in here and let's take a look at our action. So we have, for box scores, S&P 500 is measured by the SPY was down 0.34%. We had the NASDAQ QQQ actually finished flat on the day. This one was bouncing around quite a bit today. We had the IWM small caps close down 1.88%, which was our big loser for the day. And then we had the Dow Jones close down 0.29%. So let's talk about this price action today. So we have the S&P 500. When you look at this, this does not look bad at all. Am I right? So you check out this S&P 500 and you see, like, we just made a new all-time high. Even today, we actually traded to an intraday new all-time high. Let me just lower this. This is my news feed right here. Let me take this off. Yeah, right here. Let me just lower the volume, actually. So yeah, we're trading very close to a new all-time high, which is awesome. You can see we pulled back, and we have not even pulled back to the 5-day exponential moving average. So in the grand scheme, this much of a pullback is really nothing. And you can see, pullbacks to the 20-day simple moving average, that's a pretty garden variety pullback right there. So that in the grand scheme would be like, nothing. That's just a pullback. But what I'm noticing is, we're having areas of the market that are just getting absolutely obliterated today. So you have the market that's holding up pretty well, but you have certain areas that are just getting crushed. It's like NASDAQ, you can see closed down 0.08%. Again, that's basically like unchanged. That's like unched for the session. And then you look at the NASDAQ, we hit our target here, which is so shocking to me. This is actually like pretty unreal what's going on here. So we hit this Venom R2 pivot level. It's actually very rare that the indices hit, the R2 pivot level. A lot of times they do get up to this R1 pivot, and these levels, they're based off of this monthly value area down here. Getting to the R1 pivot, that's great. Getting to the R2, that's like, wow, you had a nice powerful move in that index. And you can see this NASDAQ, ever since May 12th when things bottomed, it's essentially been a nice straight line up with really no pullbacks to this 20-day simple moving average. But in terms of this rally, in my opinion, we've hit our destination. In order for this to move higher, like, oh my gosh, I don't even know, there is no R3 pivot on here. That would really be something. So that's the NASDAQ. Let's take a look at our Russell here. And the Russell definitely looks the worst. So Russell, we've been talking about this for quite a while. Russell's been range bound. And let's pull up the weekly chart just to get a better feel for that. And you can see what I mean here. We're looking at this weekly chart. We had an epic run. This is kind of similar to what I would say the NASDAQ has done over the past, couple weeks. We're like, oh my gosh, crazy. And then we've been going sideways since February of this year. So for the last 5 months, we've gone sideways. Every time we have a deep pullback, and you can see we've had some pullbacks down to like 2100, it's always been a buy. Every time we pull up to the highs, it's always been a sell within this range. What you can see here is we had our big pullback last week, and the dip was bought. And I actually bought that dip too. We got super oversold, and I bought that up as well via options. You can see we closed above this 20-week simple moving average for the weekly. But this is actually not good that then immediately we just rolled right back over. So I would say the momentum is with the bears at this point on the small cap. So we'll have to see how it plays out though. But this is a pretty textbook. Like if you're starting a bearish trend, you retest that monthly value area and then you roll right over. You can see it's going on high volume too. And then the Dow Jones down 0.3%. Again, looks like we're closing within our monthly value area. So again, this one's a little bit ambiguous. This morning, I can't forget, we had our inflation data that came out. And going into that inflation print, I sort of know the economic data has been very important this year because we have the Fed potentially tapering. We have inflation that's been running a bit hot. And if it continues to run hot, that could cause issues with the yield curve and issues with the market just as a whole, even equities. So we had that inflation data come out this morning. It came out a bit hot. And you can see 10-year treasuries were down 0.32%. That's a pretty big candle on the 10-year treasury. And then we had, if we look at our 30-year just got walloped, down 0.69%. So this big move higher in the NASDAQ has been off the back of, look at these 30-year treasuries. This was the bottom in NASDAQ right here. Also coincided with essentially the bottom in treasury yields. And you can see we've been riding this higher and higher and higher. If this breaks trend, what's that going to do for the NASDAQ? I really don't know. That's, I would assume if, this rally was good for the NASDAQ, if we pull back hard, I would assume that's going to be bad for the NASDAQ. So that's just sort of the way I'm thinking about it. And then if we look at the dollar also had a huge, extended range green candle here. And it looks like we might be about to just break beyond this pivot. So the dollar looks like it could be poised for a move to the upside as well. So yeah, keep in mind, we have all these macro cross currents. We just got this hot inflation data. Players have to adjust to that. There's going to be some players that are offsides, so on and so forth. The S&P 500 and the NASDAQ, they're still just sitting right up at these all-time highs, essentially. And they're sitting up extended. Now let's jump in. So the headline indices, they don't look so bad. Let's jump under the hood here. And you'll see under the hood, I don't know about, other investors or traders. Maybe they were somehow still doing well today. But for me, I was getting, hit across almost all my exposures that I had on the books today. And this really is the reason why. So you can see S&P 500 breadth, only 14% advancers. And you can see NASDAQ 37%, IWM 12% advancers, and the Dow Jones 40%. So there was really nowhere to hide. And some investors and traders, they primarily operate within the indices. So if you were doing that, say you're like an SPX trader, to you this is just pretty much like a regular day of volatility. Whereas if you trade individual names like I do, and you're not really trafficking in the indices quite as much, this is actually, this was a very challenging day. So it depends a lot on, who are you as a trader or an investor if you were, feeling the pain today. So let's take a look here. That's our market breadth. And then we'll pull up our sectors. So you can see sectors, everything got hit. There were a couple survivors here. We had emerging markets that were positive, up 2.36%. This emerging market, internet and e-commerce. We have the Chinese internet names bounce, up 3.2%. We have gold miners up a little bit. And you can see the XLK ETF is positive. Other than that, it was pretty much a bloodbath. So that's what I mean. We're like, if you were just solely in the S&P 500, today was like, who cares really? We're down like 0.4%. Whereas if you're invested in some of these other groups, you're down a lot more than that, 0.4%. Looking at our style factors, you can also see we had a red across the board here. See, the momentum style factor was down over 1%. High beta was down 1.7%. Cyclicals down 2%. And I observed like the price action pretty much most of the day. And what I noticed was this really looked like it was just players taking their positions down. Like I noticed, so this IWN, take a look at this price action. So this is small cap value or Russell value. And yeah, this to me looks like, hey, even though we got that hotter inflation data, originally like the reflation trade was good for value stocks. and they had their incredible run right here. Now, even as we're getting that hotter inflation, I think it's starting to get like a stagflationary vibe to it, where it's no longer even a good thing. Now, I'd say a lot of these value stocks, they are properly valued after coming off that COVID bottom. So these are just, they're in a downtrend now. And then if you look at IWO, this is the small cap growth, the Russell growth. This also looks more or less the same here. So it depends on what you're trading. Whereas like if you're in some of the mega names, you're not doing so bad. If you're in these smaller names, it's very, very challenging. And we'll pull up, just to illustrate that, our heat map. So our heat map, you can see there were really not many hiding places. And what I noticed was, and so this is what tells me, hey, players are taking down their exposures here. So like Amazon, for instance. I'm long Amazon right now. And you can see Amazon made a new high today, which is pretty awesome. I think at one point it was up like almost 1%. But then, pretty much all the strength was sold. And I noticed that in several names where it was like this stock looked almost like it wanted to be up like 1%. And by the end of the day, it was down like 2% or down a full percent or whatever that might be. Like Airbnb, this one, I have a trade in this one expiring Friday. This one, as of right now, looks like, honestly, it's not going to make it. I have the 150 by 160 call spread on. And for a couple days there, it was like, all right, we might be getting some momentum. But we have this Delta variant that, I think continues to just put pressure on these travel names. And then we just had more of that, like all the strength was being sold today. Like today, Airbnb actually got an analyst upgrade. It was by Gordon Haskett. This is definitely not a big player on the street, but nonetheless, this thing got an upgrade. Everybody on the street, all the retail as well, we can all see that it got an upgrade. And this name just got punished. And I noticed that, when I see things like that, that one tells me, hey, this market's pretty weak if stocks can't even rally on good news. And then the other thing that signals to me is, hey, I know I'm in a weak market now. I can't unknow that. What does my exposure look like right now? Am I fully exposed? Do I have options on the books? If I do, I really shouldn't. And if I'm following a good process, I need to take down some exposure. So that's what I ended up doing today. So yeah, we'll see. I pulled some quotes. I'm actually reading Mark Minervini's book. I'm almost done with it. It's I believe it's Think and Trade Like a Stock Market Champion. And Mark Minervini, what I try to do is learn from other people before me that have, been really successful traders and or investors. So for me, I definitely take a lot of these quotes, very seriously, because this isn't some like armchair quarterback. This is somebody that's won the investing championship, multiple times. This guy, he talks the talk and he walks the walk. So I think there's a couple of just good quotes in here that I was actually thinking about as I was, traversing this trading day. And the first one is, blah, blah, free, and place your bets only when the cards were stacked in your favor. How could you lose over time? One of the great things about the stock market is that all comers compete in the same ring, skilled and unskilled professionals and amateurs. This is one of the reasons why the stock market is not purely random. And then here's really the punchline. In the stock market, you have the luxury of being able to stay on the sidelines free of charge, observing and waiting for the most opportune moments to wager. You get to see the market's cards before you bet free of charge. This is a wonderful advantage, yet few exploit it. And I've noticed that over the course of the past year where the traders that got hit the most in February and March when all these growth stocks tumbled, those were the traders that stayed in the market. They were trying to continue to make upward progress during that horrible sequence in the market. And they were trying to, fight the weakness. Whereas a lot of the best traders that I know just completely folded. They were like, folded my hand, I just sold everything, and now I'm sitting and waiting for greener pastures. And so that's something I'm trying to build up a little bit more in my arsenal, where the market's just weak. The market's just weak. If I feel like I don't have an edge on what's going on, I shouldn't be there, or I shouldn't be fully exposed. So like maybe I'll still play a couple hands, but I'm not going all in on that kind of market. So I'm trying to, use that discipline within my own process here. And then, this next one here, very similar. The Achilles heel of most gamblers and speculators is the desire to play every hand, a common human weakness that allows impatience to override good judgment. And it says here, folding mediocre cards. The poker table is the same as selling off stocks soon after they fall below your purchase price to protect your account. So, yeah, I was kind of channeling this as I went through my trading today. And you'll see if you take a look, I actually stopped out of a couple things here. So where is this? This back here. Yeah, so I stopped out of my Drio common shares for a small loss here. I just wanted to keep it nice and tight because with how weak these small caps are, the small caps are very high beta. And especially if you're trading individual names, that's where you can get hit. So I was like, you know what, Drio looked like a good setup. They had some good news. But I'm going to, just stop out. Because here's the thing about stopping out of trades. And this is something that psychologically most traders and investors and speculators, they don't really think about. Is they think about the loss they're going to take. So like I took this loss. I closed out for 1920. I'd paid 20.04. So they think about, damn, I was wrong on that. I can't be wrong. Like if I wait, I know this thing will come back. I may as well just wait. I don't want to be a quitter. Like you sort of have like that stubborn feeling of like, I'm going to make it back or whatever. I don't want to be a quitter. I don't want to be wrong. Whereas the upside that you're not really thinking about, and I've been a victim of this too, is you don't realize when you do that, you get your $19.20 back. And that just becomes cash in your account. And that way, let's say if the market does get really dicey or it gets a little ugly or a little pullback, or let's say even if that doesn't happen and this was actually the low, and then all of a sudden, we just get this really nice burst of market strength, you now have that cash that's sitting there and you have the optionality to do whatever you want with it. So that's definitely, a huge benefit. The worst is when you're getting just like ripped up and then you're like, ugh, and then you realize, I have no cash to put to work. That's definitely one of the worst feelings. So to me, this is something I'm trying to get even better at, folding even quicker. And there's definitely like pressure of like, you don't want to look like you're wrong. You don't want to look like an idiot, but you just got to say, screw it. If I look like an idiot, I look like an idiot. If I sell the low, I sell the low. It doesn't matter. And then I closed out Roblox, which this one was actually a nice winner for me. So this one, I closed out a bunch of this position much higher in the 90s. Well, this one I closed out for 84.31. I paid 73.91. And Roblox is a name where I'm super bullish on this company long term. And I've done a lot of work on this name, so this could have easily been one for me where I get stubborn and go like, no, I know the fundamentals are good. Like, I know it's going to work. But as I look at the way this chart is starting to set up here, we had that push. I had a pretty decent cushion in this trade, to be quite honest. Like, even on the remaining piece I had on, I was up like $10 on it. But we're really starting to press this monthly value area low. And we're pressing it up on that 50-day moving average. So this to me, like, would I be super shocked if we get, say, like a 1% down day in the market and this all of a sudden breaks value? And then all of a sudden I'm like, man, I have to sell it. So I try to be a little bit proactive. I got rid of that one too. And then on options, yeah, this was, for me, I was just taking losses today. So I put on, the one trade I did open was, I opened some calls on this MSOS cannabis ETF. But I stopped out of my MP calls. What else did I do? And then I also stopped out of my Futu call spread. This is another one I could very easily be stubborn on this one, but I was like, you know what, I'm going to take that money, put it back in my pocket, and I'm sure that I'll find a good place to deploy that capital, especially in an area where you're not downtrending. So if you look at Futu, yeah, Futu, so like, if I were to pull up a chart or post a trading setup as a long setup, this would definitely not be it. This looks almost like a nice bearish setup where like you could buy puts on Futu and play it down to this VPOC down here at 124. It doesn't look like a bullish setup anymore. So you have to just detach from, oh my gosh, but I bought the call spread at a higher price. It doesn't matter. Really our job is minimize your loss. That way you can, play the next hand essentially, and you'll be ready for it. And then I diagonalized. I have a Nike call option on. But this one's actually working very well. And I turned it into a diagonal call spread just in case we get a rockier market here. That way it reduces my cost basis. It'll allow me to sit with this position through thick and thin and not really, worry about it as much. I close out these Dow Jones calls for a scratch. But this MP trade, so I think this one is a good example. Like once this happened, this was kind of like the final, signal to me. Like I might need to lighten up here. Like I actually have to lighten up. So one of the things when you're trading in the market, you want to listen to the market feedback that you're getting. Is your win rate declining? Is your win rate increasing? How many of the last 10 trades did you put on did you win? How many of them did you lose, etc. And MP, this was one where yesterday I threw on some calls on this, and it was like, okay, we're pushing beyond this pivot level. This rare earths ETF is doing well. We're getting some more strength in these inflation-sensitive areas of the market, whatever. And immediately, like, boom, next day on the trade, I just get hit. I closed this out before it was down 6.14%, but nonetheless, we just pretty much bearish engulfed that candle. So to me, like, you start to remember these sequences in your mind where I'm like, that should not happen to me when I'm in, the correct market environment, and I'm in the environment where I make a lot of money in the market. So that to me was like, this is what's happening. Like, that's not what I'm here in the market to do. Like, I'm not here to put on trades every day and, where they go up, they go up, they go down, they go down. Like, I'm not just here to, like, sling the rock. Like, I want to be putting my capital to work when I feel like I have an edge. So this was also, like, the signal for me, like, I do not have an edge here. Because the inflation number came out hot, but then all the inflation-sensitive areas of the market still went down. You had the yield curve, like steepening out, but the NASDAQ still somehow being the best performing index. And it's like, that to me, there's just too much like weirdness going on in the market right now. So those are my trades for the day. And now coming into tomorrow, I'm a bit lighter on positions. If tomorrow's another kind of like wonky day, I will reduce it even further. I'll go to 100% cash. And to me, I'll be happy to do that. If I can step out of the way a little bit and let the market do its thing, that's okay with me. But let's jump over real quick. We'll check out our options order flow. And watch, this is definitely like some like words you hear at the bottom. Watch, tomorrow will be like a nice like rip-roaring like bullish day. We'll have to see. But yeah, that could be the case as well. Let's see. Okay, so we had a lot of flow for SPX. And then you can see our biggest individual flow leader was Amazon. You can see we had mostly calls. You can see we had some puts here as well. Wow, these are 5,000 strike puts. They just put on these like deep in the money puts. It's kind of interesting. I already have Amazon as a long. You can see Tesla. We had a lot of flow in this one as well, a mixture of puts and calls. And Tesla is another one where this to me just showed players were taking down their exposure. So Tesla is another one where in the morning we were strong. We opened up pretty much at flat, and then we rallied up here. So if I pull up like this, we'll say like a 30-minute chart. So check this out here. So this is at 9:30. You can see we pushed all the way up to 693, and then boom, we just got a big wave of selling, and we just didn't really stop until the end of the session. That to me is like telltale sign, like this is not that market that you want to be super aggressive in. So let's see, we had that. Let's see if anything was a bit unusual. We had Facebook, we had Baba coming in. Apple was another name that was pretty strong today. At least, in the beginning of the day, it was showing some relative strength. Let's pull up Apple. But yeah, it doesn't really look like there were, that many like unusual flow leaders. So let's see, Apple. And we'll go back to the daily. Yeah, Apple did manage to close positive. So this one was up 0.79%. And you can see we're kind of fighting and battling at that pivot, battling at that new all-time high. They had some news today. I believe they are releasing a new battery pack. I think they're doing something with Goldman Sachs as well, or like even finance the iPhones, that whole thing. That about does it for this market recap video. This one's a little bit longer than usual, just because I felt like there was a lot to discuss. But yeah, I hope you all had an awesome trading day, and I will see you all tomorrow.